Is the Federal Reserve running the risk with higher for longer of forcing this economy into a recession, and an eye on the housing market, which I know you're watching?
Yeah. Well, I think that they have to take that risk. I mean, I think that I've been in the camp that they are going to stay a little bit higher for longer. I noticed that, the dot plots today suggested 3 cuts, but on the precipice of only suggesting 2. I mean, it's very clear that they're doing exceptionally well on one side of their mandate. Unemployment is very, very low, and that's great. CPI and PCE continue to be sticky high. I think the Fed actually faced potentially a credibility crisis last year with their miss in terms of thinking that inflation would be very transient. So they really had no choice. I think they're going to need to continue to watch the data, but it could tip the economy into recession. It's been a very anticipated recession that the yield curve has been planning for, that the markets have been planning for, is yet to arrive. But I think they're doing the right thing by staying the course and looking at the inflation data as it comes in.
Well, of course, there's no shortage of political commentary around Federal Reserve policy. And what you've consistently heard, especially from progressive lawmakers, initially was concern that rates were going to stay too high and it was going to impact the labor market. Right. When it was clear that labor market impact wasn't happening, it seems that a lot of that messaging has now shifted to housing and the fact that it's very unaffordable, that mortgage rates are incredibly high. How much concern do you have about where we are in housing right now and how much risk may be out there? Yeah, for sure. This rate lock effect is a real thing where people have 3.5% mortgages and so they don't want to sell their home and they're kind of stuck in their house and so inventory is very low. For the last 2 buying seasons, just anecdotally, you drive around Maryland, Virginia, D.C. area, you see no for sale signs. Oh, believe me, I know it. It's tough. And this year I came in optimistic. I said people have to get on with their lives, right? People have things that change. They get changed jobs. They need to move, et cetera. So this has to be finally a breaking point. Well, the weather's pretty nice, and I'm still not seeing any for sale signs out there. So the rate lock effect may have a little bit more time to run. As far as the rate impact, if we can find a little bit of a range, which I think that we have, so the 10-year note spiked to 5, but then it kind of came back down in the 4.3 area, and it's sort of holding steady in that regard. If that continues, mortgage spreads should come in a little bit, and that could be a little bit of relief on the rate front, but it's really a supply problem at the end of the day. We heard from the White House on this. The president's out with a series of proposals to try to unlock some of the stuff we're talking about in the housing market. Kailey and I spoke with National Economic Council Deputy Director Daniel Hornan about this. We discussed what needs to happen to improve the housing market. This is the view of the White House. Let's listen.
I think we really need an approach on housing policy that goes at putting incentives in place to add to the supply of housing. So his plan that he's sent to Congress would lead to the construction of 2 million homes. But we also need to take action that goes at unlocking the housing market.
But of course, it takes time to build 2 million homes, to get them cleared, to get them permitted. Yep. It takes God knows how much time to get anything past Congress. So is there anything that this administration can do now? They're working around the edges. I mean, they're trying to make some things cheaper, and I think this realtor settlement could, be a game changer in terms of cost. But again, he's right, and I agree, it is a supply problem. I think not having housing supply in the infrastructure bill that did pass when the president first took office was a major miss. I don't have any particular party to blame for that. I just think that was a real mistake. Everyone has known that this has been an affordable supply problem for a very long time. A lot of that is at the local and state level. It looks like the president is making some pitch for tax credits and subsidies to try and encourage the development of low-income housing, or at least affordable housing. Right. All of that is good, but the NIMBYism is real. This is a pretty sticky problem. I do worry that we may be entering almost a European-style generational shift here, where kids live with their parents until their 30s, and it takes a long time to get that first home. I really don't want to get stuck in that trap, but it would take a pretty concerted national effort to build housing supply. And of course, this is all in the residential real estate realm, but there has been a lot of concern in commercial real estate as well, including increasingly in commercial real estate CLOs, collateralized loan obligations. Basically, you bundle all of this risky debt together. And yet in just the last 7 months, according to our reporting, the share of troubled assets held by these CRE CLO products has surged fourfold to more than 7.4%. Should we be concerned by that? Well, I think commercial real estate is a broad term. So office space is obviously
struggling quite a bit, and it's still very unclear, when that finally works its way through the system. I mean, anecdotally, we're in a lease that we've been in as a 7-year lease, and we still have 2 years on it, so we're paying our rent on time. But I guarantee you, we're going to look for a cheaper lease when that changes. So it's a slow-moving train in the office space sector. Hotels, leisure industry, shopping centers, moving out to the suburbs, those commercial real estate products have been doing very well. So I'm not in the camp that there's some sort of ticking time bomb out there. I think people have been looking for this shoe to drop for a very long time, and it hasn't. That doesn't mean we shouldn't be vigilant and continue to watch it. I think we just have to work through this sort of structural shift that we're going through in society in terms of the way we relate to work from office, working downtowns. Downtowns are obviously dealing with a lot. I think crime, especially in D.C., this has been an overhang on some of these things. So you got a lot kind of macro factors that are at play here that all need to be brought to solution in order to avoid anything catastrophic. But it's worth watching. I just am not in the camp that this is an immediate threat.